Welcome to the Deep Dive. Today, we're taking a really interesting look back, specifically at Bitcoin, on April 19th, 2025.
Right.
You shared this source, a detailed podcast actually, in Urdu Bitcoin News today from that date.
Mm-hmm.
And our job really is to unpack it, get past the noise, and figure out what was actually significant then.
Exactly. It's like a snapshot in time, that podcast.
Yeah.
It gives us this focused view covering, market moves, tech updates, global news,
Yeah.
the whole picture.
So we're digging into that snapshot, pulling out the key bits.
That's the plan. Highlight what really mattered.
Okay, let's dive in. Price is always the big headline grabber. Right?
Sure is.
So April 19th, 2025, the report pegged Bitcoin at $85,300.
Mm-hmm. 85.3.
What stood out was that 2.3% jump in just the last 24 hours. That kind of move always makes you ask, why? What was driving it?
Well, it seemed like a few things were kind of bubbling up at the same time, according to the source.
Okay.
First, there were these, hints is the word they used, from the U.S. Federal Reserve.
The Fed. Hints about...
About maybe cutting interest rates, a possible cut.
Right. And that often boosts assets like Bitcoin, doesn't it? Makes safer investments look less appealing.
Exactly. So that's one piece. Potential easing from the Fed can definitely push investors towards, riskier assets.
Makes sense. What else was in the mix?
A really big one was Japan. News came out they were moving to recognize Bitcoin as actual legal tender.
Whoa, legal tender in Japan. That's not small news.
Not at all. It's significant because, when a major economy does that, it sends ripples. It can influence how other countries think about regulation, about legitimacy.
Yeah, I can see that. A kind of validation.
Precisely. And then, kind of related to the institutional side, you had Bitcoin ETFs.
The ones from BlackRock, Fidelity, those big names.
Yeah, exactly. They were performing really strongly, which, again, points to that growing institutional interest.
Right. That theme just seemed to keep building, more traditional money coming in.
It did. And the success of those ETFs was like concrete proof of that demand. We're talking major players allocating serious capital. That moves the needle.
Okay. The report also mentioned a quick comment from a financial expert saying the rally might continue, especially thinking about the halving event that was apparently coming up the next week.
Yeah, the halving was right around the corner.
So for folks listening who aren't, deep into Bitcoin mechanics, what's the basic idea behind the halving? Why does it matter for the price?
Sure. So the halving is, it's baked into Bitcoin's code. Roughly every 4 years, the reward miners get for creating new blocks. It gets cut in half.
Okay, so fewer new Bitcoins are made.
Exactly. It slows down the rate of new supply entering the market. And historically, though you always have to say past performance isn't a guarantee.
Right, of course.
Historically, if demand stays the same or goes up, reducing that new supply has often, preceded price increases.
So the expert was basically saying, hey, we've got good market vibes plus this supply squeeze coming up.
That seems to be the idea. Positive sentiment, potentially getting a boost from less new Bitcoin being generated. But again, it's a theory based on past events.
Got it. Okay, that paints a clearer picture of the market mood that day. Let's switch gears to the network itself, the tech side.
Okay.
The report mentioned mining difficulty. After the halving, it was expected to settle around 68 trillion, which was a slight decrease, apparently.
Yeah, a slight dip. Think of difficulty as like an automatic balancer for the network.
How so?
Well, after a halving, miners get paid less Bitcoin for the same work. So some miners whose operations aren't super efficient, they might become unprofitable.
So they might turn off their machines.
Right. And if some miners leave, the network automatically adjusts the difficulty downward slightly to keep blocks being found at roughly the same rate, about every 10 minutes.
I see. But 68 trillion still sounds astronomical.
Oh, it is. It still signifies an incredibly secure network. It takes a huge amount of computing power to mine Bitcoin, even with that slight dip, shows serious investment in the infrastructure.
Okay. And layer 2 solutions. The Lightning Network came up. A 30% jump in transaction volume. That sounds pretty significant.
It really is, yeah. The Lightning Network. That's built on top of Bitcoin.
Right, for the faster, cheaper panel.
Exactly. Think of the main Bitcoin blockchain as the main highway. Sometimes slow and expensive. Lightning is like, adding express lanes.
Okay.
So a 30% increase in volume on those express lanes suggests more people are actually using Bitcoin for smaller, quicker things, not just holding it. It points towards, growing utility.
More everyday use potential.
Essentially, yeah.
The report also mentioned privacy improvements. Something about the Taproot upgrade.
Ah, yes, Taproot. That was a major upgrade.
We've heard the name, but what did it actually do for privacy?
Well, in simple terms, Taproot makes different kinds of Bitcoin transactions look more similar on the blockchain.
Okay.
So a complex transaction may be involving multiple signatures or some kind of smart contract. After Taproot, it could look just like a simple, standard person-person payment to an outside observer.
Ah, so it makes it harder to tell what's really going on under the hood for certain transactions.
Exactly. It enhances privacy by making different transaction types less distinguishable,
Yeah.
kind of like giving certain transactions a better disguise.
Interesting. Now, here's a number that really jumped out at me from the report. Average transaction costs were $1.20.
Mm-hmm.
And they said that was a 95% decrease from 2021. 95%. That's huge.
It's a massive drop, absolutely.
What caused that? How did fees get so much lower?
It's likely a mix of things. Definitely the growing use of layer 2s like Lightning helps a lot.
Because those transactions mostly happen off the main expensive highway.
Precisely. They take a lot of the smaller payments off the main Bitcoin blockchain, reducing congestion there. But it could also just mean the main network itself was less congested compared to, say, the peaks we saw in 2021 when fees spiked.
Right.
Either way, lower fees are crucial. It makes Bitcoin far more practical for, everyday stuff, sending small amounts, maybe remittances, things like that.
Okay, so the network was getting potentially more private and definitely cheaper to use. Let's zoom out again. Global picture. What was happening with regulations and news around the world on April 19th, 2025?
It was still a real patchwork, very different approaches in different places.
Like where?
Well, in the U.S., the trend continued. The SEC had just approved another Bitcoin ETF.
Okay, so more inroads into traditional finance there, more options for investors.
Exactly. It just kept reinforcing that integration theme.
What about Europe? What was the feeling there?
Interestingly, the report mentioned the European Central Bank, the ECB. They were apparently exploring convergence.
Convergence between what?
Between their own potential digital euro, a CBDC, a central bank digital currency, and Bitcoin.
Huh. So not necessarily seeing them as enemies, but maybe ways they could coexist.
Yeah, or even interact somehow. It hinted at a future where maybe CBDCs and decentralized cryptos aren't just competitors, but might actually complement each other in some ways.
That's a fascinating idea.
Yeah.
Very different from, say, China, right? The report said they were tightening restrictions.
Right. China was reportedly cracking down further on Bitcoin mining.
And the reason.
The report suggested it was largely to clear the way for their own CBDC, the digital yuan.
Ah, promoting their state-controlled version.
Seems like it. So a very different philosophy compared to the U.S. or what the ECB was exploring.
And then you had the Middle East, specifically the UAE, doing something else entirely.
Yeah, Dubai was setting up a new blockchain-free zone, apparently offering tax-free crypto trading.
A free zone,
Yeah.
so actively trying to attract crypto business.
Looks that way. Creating a really favorable environment, likely hoping to become a major hub for the industry, pull in talent and capital.
So really diverse approaches globally. But the report included a quote, something from a crypto lawyer.
Yes, summarizing the overall trend.
What was the gist?
The lawyer's take was that in 2025, the dominant global direction wasn't outright bans anymore. It was shifting more towards regulating crypto.
Okay, trying to create frameworks rather than just saying no.
Exactly, which suggests, a kind of maturing view from regulators globally, acknowledging crypto is here to stay and figuring out how to manage it.
Right, integrating it somehow. Okay, so
Right.
that covers the present of that day.
Mm.
What about the future? Any predictions or investment tips being discussed?
Definitely some forward-looking stuff.
Right.
On the price front, Goldman Sachs apparently had a prediction out.
Oh. What were they saying?
They were suggesting Bitcoin could hit $120,000 by the end of 2025.
Wow, 120K. That's quite bullish, especially from a big bank like Goldman.
Very bullish. That would certainly make headlines.
And what about the sort of long-term Bitcoin believers? People like Michael Saylor. What was their view?
The report touched on that. Figures like Saylor apparently felt the full impact. They called it the halo effect of all these developments.
Like the ETFs, the clearer regulations.
Exactly. They believed that full effect hadn't really hit yet, implying, still more room for growth, more upside potential long term.
Still optimistic then. Okay, shifting to advice for investors. Dollar cost averaging, DCA, came up again.
Yep, a classic strategy.
Can you just quickly remind us why that's often suggested, especially for something as volatile as crypto?
Sure. DCA just means investing a set amount of money at regular times, say every week or month, no matter what the price is doing.
So you buy a bit, whether it's high or low.
Right. And over time, it averages out your purchase price. It helps smooth out the bumps, reduces the risk of putting all your money in right at the very top of the market.
Makes a lot of sense for crypto. The report also emphasized security,
Huh.
using hardware wallets, Ledger, Trezor, those kinds of things.
Absolutely crucial.
Why are they considered so much safer?
Because they keep your private keys, the actual keys to your Bitcoin, completely offline.
So not connected to the internet where hackers might get at them.
Exactly. A software wallet on your computer or phone is always online, potentially vulnerable to malware or hacks. Hardware wallets isolate those keys, making it much, much harder for anyone to steal your funds. It's a huge security upgrade.
Got it. Secure storage is key. Lastly, the report mentioned a sort of new emerging trend, Bitcoin and AI, artificial intelligence.
Yeah, that intersection was flagged as something developing.
That sounds potentially huge. Any ideas what that could actually mean? What might that look like?
Well, it's definitely an area with tons of possibilities, though probably early days, back in April 25.
Sure.
You could imagine AI being used to analyze blockchain data much more deeply, maybe leading to smarter trading bots or better ways to assess risk.
Okay.
Or maybe AI could help optimize Bitcoin mining, make it more efficient. Or even integrate into network security somehow. It's really a wide open field, but definitely something highlighted as, watch this space.
Very interesting. Okay, let's try to wrap this up. Quick summary of our deep dive into Bitcoin, April 19th, 2025.
Right.
We saw the price was up around 85K, potentially driven by Fed hints, Japan's legal tender move, and strong ETF flows.
Yep, and the network tech was evolving. Lightning Network use was growing significantly, Taproot was boosting privacy.
And transaction fees were way down, making it much cheaper to use.
Exactly. Globally, a real mix of regulations, more ETFs in the US, ECB exploring convergence, China cracking down, UAE opening up.
But the overall trend seemed to be towards regulation, not bans.
Right. And future predictions were optimistic, like Goldman's $120K call with ongoing advice focused on DCA and hardware wallets.
Plus that emerging Bitcoin and AI angle.
That covers the key points from the report, I think.
Yeah, so you came to us wanting a clear but thorough rundown of what was happening with Bitcoin on that specific day. And hopefully, by digging into this specific Bitcoin News Today source, we've kind of sifted through it and pulled out the really significant bits for you.
Yeah, the aim was to give you those core insights, the main trends, and what might lie ahead, all based on that snapshot from April 19th, 2025.
Now, the original source, like many in crypto, mentioned DYR. Do your own research.
Always good advice.
So this conversation is really just one perspective, a starting point based on that report. It even mentioned resources like bitcoin.org or looking into Taproot updates if specific things caught your ear.
Definitely. So, thinking about all this, what stood out most to you from that day's news? Any new questions pop up?
Yeah, it makes you think.
And maybe one final thought to leave folks with. Considering everything we talked about, the institutional money coming in, the clear regulations evolving, these new tech intersections like AI,
Yeah.
how do you see that continuing convergence between, traditional finance and this decentralized world playing out? And what's Bitcoin's ultimate role in that future, maybe beyond just being, digital gold or a store of value? Where else might